Every market crash is a massive test of human nature. Most people flunk it spectacularly. They scream, they stampede, they fall all over themselves at the absolute bottom to trade the proof of their life's savings for a fistful of worthless fear. You look at this, and it seems absurd, but I've watched this same play unfold countless times in my life. The actors change, but the script remains untouched. So where's the problem? Why is it that the lessons of history never seem to actually teach anyone anything? The answer is right there on that little screen, flickering in your hand. What you call stock ownership isn't for most people ownership of a business at all. What is it? It's a ticker symbol, a chip on a gambling table, a squiggly line that goes up and down. Their decision to buy isn't based on a calculation of business value, but on a primitive tribal impulse. Everyone else is buying, so I'd better buy too. They dignify this behavior with the word investing. This is not investing. This is a total intellectual surrender. They've handed over life or death power over their own capital to a crowd of people they've never met, whose intelligence and ethics are, frankly, deeply suspect. Maybe it's a fast-talking analyst on TV, some anonymous guru on social media, or even just a casual tip from a friend at a poker game. So, when the storm comes, when the numbers on that screen flip from green to a glaring red, their world collapses. They frantically mash the sell button for one reason and one reason only. From the very beginning, they had no earthly idea what they had actually bought. They were holding a black box, something they couldn't understand, couldn't touch, and couldn't explain. The fear is always the byproduct of ignorance. You're not scared because the stock price fell 20%. You're scared because you don't know if the company's intrinsic value is still there after a 20% drop. You don't know if its products are still competitive. You don't know if its management is lying. You don't know if its business model has just been made obsolete. Your mind is a complete blank, filled only by that ever-growing loss figure, whispering to you like a devil, "Run, it's all over." People always ask me if I wasn't scared during those historic crashes. Black Monday in '87, the dot-com bust in 2000, the financial crisis in '08. My answer is this: of course, I feel uneasy. Any sane person feels a bit of discomfort watching their net worth evaporate on paper. The unease and panic are two entirely different things. Panic is the state where reason has been completely overthrown by emotion. In my dictionary, that word doesn't exist. In moments like those, not only did I not sell a single share, but on the contrary, I took every dime of cash I could get my hands on and converted it into ownership of high-quality companies that the market was treating like garbage. You think that's because I'm brave? It's the exact opposite. I am the most timid person in this market. My timidity shows up in my absolute refusal to touch anything I don't thoroughly understand. And my courage has never come from some innate recklessness. It comes from a mountain of knowledge accumulated over time. It comes from the stacks of annual reports in my study that are taller than I am. It comes from decades of quietly observing and thinking about the fundamental principles of the business world. I've probably spent more time reading and studying than most people spend on their entire careers. While others are out on the golf course or at cocktail parties, trading cheap and deadly tips, I'm alone, having a conversation with the past, present, and future of great businesses. To the uninitiated, financial statements are just a dry, incomprehensible mess of numbers. To me, they're detective novels filled with clues, truths, and lies. When you've studied a company inside and out, when you know its business model, its moat, its management, its culture like the back of your hand, the market's daily quotation loses its power to guide you. Instead, it becomes a tool for you to exploit. Think of the market as a business partner who is a manic depressive. We'll call him Mr. Market. Every day, he shows up at your door and quotes you a price. He's willing to either buy your shares or sell you his at that price. The fellow has a serious mental problem. Some days, he's euphoric and names a ridiculously high price. Other days, he's despondent and offers you a pathetically low fire sale price. Most people do. They treat this lunatic as an oracle of wisdom. When Mr. Market is giddy, they get giddy too and buy at the top. When he's hysterical, they become terrified and sell at the bottom. Their emotions are completely led around by this madman. It's a tragedy. What should you do? You must have your own internal anchor for what that business is worth. This anchor must be based on facts, data, and rigorous logical analysis, not on Mr. Market's bipolar quotes. When he quotes a price that's far too high, you should be happy to sell your shares to him. When he's in a panic and selling his assets for pennies on the dollar, you should be quietly delighted and graciously take those undervalued gems off his hands. Remember, he is there to times serve times you, not to times guide times you. You absolutely cannot let his emotional state infect your own judgment. If you can do that, you've already surpassed 90% of the people in the market. So, before you decide to buy any company, please perform a thought experiment. It's 100 times more important than any financial model you'll ever learn. To close your eyes and ask yourself honestly. Asterisk. If the stock market were to close tomorrow for 10 years, and I couldn't make a single trade, would I still be willing to buy this company at this price today? Asterisk. If your answer contains even a shred of hesitation, stop what you are doing immediately. Your hesitation proves one thing. You're not buying a business. You're buying a lottery ticket. You're hoping that tomorrow, or next week, or next month, some bigger fool will come along and take that ticket off your hands for a higher price. This is the greater fool theory, and history has proven time and again that the final fool is usually you. When you enter the market with the mentality of a lottery ticket holder, you will naturally become obsessed with the daily drawing the stock price. Your joy and sorrow will be completely held hostage by that randomly fluctuating number. The moment the results don't go your way, you'll toss the ticket in the trash without a second thought. But if your answer is a firm and resounding yes, I would, then congratulations. You are on the path to becoming a true business owner. Why would you be willing? Because you know that during those 10 years the market is closed. The excellent business you own hasn't gone to sleep with it. Its factories are running. Its employees are working. Its products are selling. And its profits are growing. It's using its earnings to reinvest, widen its advantages, and take territory from its competitors. 10 years later, when the market reopens, you'll be pleasantly surprised to find that the intrinsic value of your business may be several times what it was a decade ago. That's the power of compounding. That's the certainty of business value growth, the market's temporary closure. In fact, provided a perfect, noise-free environment for that growth to happen. The true owner might even be excited by the prospect. So you see, the strength of your conviction has nothing to do with willpower or mental toughness. It has everything to do with cognitive depth. Your confidence must be built on a solid foundation, not on flimsy hope. And that foundation is what I call understanding. So, what does it mean to understand a company? It's not about predicting whether next quarter's earnings will be up 10% or 12%. That kind of short-term forecasting is a game Wall Street analysts play, and their accuracy is about the same as a coin flip. The understanding I'm talking about is a more fundamental grasp on 3 levels. The asterisk level 1. Understand the nature of the business. Asterisk. Is this a good business? A good business usually has a high return on capital and doesn't require constant, massive capital injections to keep running. It has a wide moat to protect it from invaders. That moat might be a powerful brand. People will pay a premium for a certain cola, a unique patent, a life-saving drug, the massive network effect, the social media platform everyone uses, the dominant cost advantage, a retailer with massive scale. You must think like a military strategist, assessing the width and depth of that moat. Will it still be there in 10 or 20 years? Is it getting wider, or is it slowly being filled in? These are the big life or death questions you need to be thinking about, not how many phones they sold last quarter. Asterisk level 2. Understand the people running the business. Asterisk. I would rather invest in a second-rate business run by first-rate people than a first-rate business run by third-rate crooks. The quality of management is the key variable that determines a company's long-term fate. Are they honest? When they write to shareholders in the annual report, are they being candid or just whitewashing problems? Are they rational when it comes to capital allocation? Are they shrewdly creating value for shareholders? Or are they engaging in ego-driven, value-destroying acquisitions? You have to be a bit of a psychologist, analyzing their motives and behavior, their letters to shareholders from the past 20 years. See how they made decisions in good times and bad. People are the hardest asset to evaluate, but they may also be the most important. The asterisk level 3. Understand the price of the business. Asterisk. The best company in the world can be a terrible investment if you pay too much for it. The entire essence of value investing is buying a dollar bill for 50 cents. The market's periodic fits of terror are the perfect opportunities to do just that. Your own estimate of a company's intrinsic value is the only benchmark you should use. This estimate doesn't need to be precise, down to the second decimal place. A fuzzy range with a large margin of safety is all you need. When the market price is well below the low end of your value range, you should act decisively. Otherwise, you need extraordinary patience. The key to winning this game isn't how often you swing, but that you only swing at the great pitches in your sweet spot. When you have thought through these three levels, the business, the management, and the price, your understanding is finally up to par. This understanding will form an unbreakable logical loop in your mind. It will become your psychological fortress. When the market storms rage and everyone is questioning everything, you can sit comfortably behind those walls. Your heart will be steady because you know that the storm will pass, and what you own is something real, something that will continue to create value. Most people in this world are desperate for a shortcut. They want a magic indicator, a black box that predicts the market, a secret that will make them rich overnight. They attend expensive seminars, buy complicated software, and worship fleeting stock market gurus. It's a colossal joke. If there's any secret to investing, it's that there is no secret. There is only basic, old-fashioned common sense and the grunt work of day after day, year after year effort. My job is not so different from a detective's. It's just a lot of reading, filtering information, tuning out noise, looking for clues, and finally forming a complete picture of the facts in my head. The process is tedious and lonely. It requires immense patience and focus. It's not glamorous at all, but it's the only way. You have to go through those dusty old filings yourself. Read them word by word. Check the numbers figure by figure, and think through the business models one by one. The knowledge you build must be homegrown in your own mind, not borrowed cheaply from someone else. The opinion you heard from someone else is the most expensive and dangerous asset in your portfolio. Because when things change, you don't know the assumptions behind that opinion. You don't know under what conditions it becomes invalid. You're just a parrot. The seas are calm. That's fine. But the moment a storm hits, that borrowed conviction will instantly shatter. My goal in life has not been to get smarter, but to consistently avoid doing stupid things. This is much harder than it sounds. And what are the stupid things? Selling a great company in a moment of extreme market panic. That's stupidity number one. Chasing a hot trend you don't understand because of greed. That's stupid. Using too much leverage. Leaving yourself no room for error. That's stupid. Trading frequently and wasting a fortune on commissions and taxes. That's stupid. You don't need to make that many brilliant decisions. You just need to systematically and consistently avoid these fatal blunders. And your long-term returns will naturally surpass the vast majority of professionals and amateurs in the market. Investing is not an offensive game about who scores the most points. It's a defensive game about who makes the fewest mistakes. In the end, Every dollar you make in the market is a reward for the depths of your understanding. When you held on, or even bought more, in a panic, because of your deep knowledge, the market rewarded your rationality. You refused to participate in a speculative bubble because you didn't understand it. The market rewarded your discipline. You waited patiently for years for the right price. The market rewarded your patience. You're never making money times the market. You're making money from the people who are defeated by their own greed, fear, and impatience. The market itself creates no value. It is merely a venue for reallocating wealth. So, young man, forget about those dazzling charts and indicators. Turn off that infuriating stock ticker that messes with your mind. Now go back to your desk. Go back to common sense and find a great company, one that you can understand and would be willing to partner with for a decade. Then buy it at a rational price. After that, the most important thing for you to do is nothing. Go live your life. Focus on your career. Spend time with your family. Let entrepreneurs who are smarter and harder working than you are work day and night to make you rich. Let the snowball of compounding roll down that long, quiet hill all by itself. It sounds unbelievably simple, but all great truths are simple. It's just that executing that simplicity requires extraordinary wisdom and discipline. Now, let's go back to our original question. Remember this sentence. Carve it into your brain. Let it be the cornerstone of your investment philosophy. Asterisk, asterisk. The depths of your understanding of a company determines the strengths of your conviction in holding it. Asterisk, asterisk. When you truly thoroughly understand what you own, no amount of market noise can shake you. Your mind will be like a fortress. Let the world outside wage its wars. You will remain unmoved. It's not only the path to financial freedom, it is the only path to inner peace.